Hello, everyone. Good morning and good afternoon. Warm regards from Solo, Indonesia. Welcome to another webinar series, Digitalizing Finance with Technology, Future, Trends, and Research, organized by the Doctoral Program in Economic Study, Faculty of Economics and Business, Universitas 11 Maret, supported by Center for Fintech and Banking, Universitas 11 Maret. My name is Agista Prameswari, moderator on today's webinar. Now has joined with us Professor Meryem Duygun from Nottingham University, UK, and also the distinguished Professor Rahmawati, Director of the Doctoral Program in Economic Study, Faculty of Economics and Business, Universitas 11 Maret. Before we start this webinar, we will together hear the opening remarks delivered by the Director of the Doctoral Program in Economic Study, Faculty of Economic and Business, Universitas 11 Maret. So, Professor Rahmawati, the floor is yours.
Okay, thank you very much, Honorable Prof. Meryem from the University of Nottingham and all participants of the workshop. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon and good morning for participants, and good morning for Prof. Brian Lusty. On behalf of Universitas 11 Maret, I thank very much Prof. Lusty for his willingness to share some insight in the quest lecture on digitalizing finance with technology, future trend, and research. I would also like to thank the participants for your enthusiasm to participate in this event. The participants are not only coming from our university, but also from other institutions in Indonesia and outside Indonesia, such as Malaysia. This event is organized by the Doctoral Program in Economics, Faculty of Economics and Business, and in collaboration with the Center of Fintech and Banking, Universitas 11 Maret. Yeah. Technological advance has led to more innovation in the financial sector. Therefore, the landscape of financial industry has changed over the last few years. There has been rising a number of technological platforms providing financial services, which include peer-to-peer lending, digital payment, cryptocurrencies, insurtech, robo-advisor, and others. We are lucky today that Prof. Meryem, a very well-known scholar in finance and the president of International Finance and Banking Society, is willing to share insight and perspectives. She is now also focusing her research and financial technology, more particular in insurance issues. Yeah. This event is also in line with the focus of the doctoral program in economics of FEB, Universitas 11 Maret, doctoral student to select hot topics and timely issue for the PhD dissertation. Ads and the research will be disseminated in international publication outlets. Finally, let me reiterate that we strongly expect that this forum will be beneficial for you. And thank you very much for participating in this quiz lecture. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Prof. Rahma, for the opening remarks. So now we'll meet our speaker for today's webinar. Please welcome Professor Meryem Duygun from Nottingham University, UK. She is the president of International Finance and Banking Society, or IFABS. She is also the associate editor in Frontiers in Artificial Intelligence and guest editor for Journal of Corporate Finance and Journal of Banking and Finance. Hello, Prof. Meryem.
Hello, thank you very much for this very kind introduction, and thank you very much for having me. This was a great honor for me to be with you today. And thank you very much, Professor Fatma, for this lovely introduction. It's a really great honor to be invited by the Universitas Sebelas Maret, Faculty of Economics and Business doctoral program, and the UNS Fintech Center. My talk today is going to be on digitalizing finance with technology. I would focus on future trends, and we will also have some important areas of research that was done and what can be done further in this area. Okay, let me take you. Can you hear the second slide? Can you see the second slide? Yes?
No, I still can see your slide. Can you start?
I am on the outline. Can you see the outline?
No, not yet. Not yet, Prof. So for all of the participants, before we start the course, I would like to inform to all of you that after the course delivered by Prof. Meryem, we will open a Q&A sessions. You are allowed to asking directly to Prof. Meryem. Please use raise hand features, and we'll ask to the committee to unmute the participant's microphone, or simply you can write your questions in the chat box with the format name _ school or institution you are coming from _ questions. And I will help to read the questions one by one for our speakers. So now, Prof. Meryem, can you can start to share your screen. Without any further ado, I will please Prof. Meryem to take the floor.
Can you see the screen now?
Not yet, Prof. Still cannot see your screen. Yes, you can retry. Or Prof. Meryem, if you find any difficulties to share the screen, you can share the PPT to the chat box. We will help you to share the screen from here.
Okay, just 1 second, please.
Okay. Yes, great. We can see your screen now. Yes.
Can you see the screen now?
Yes.
Perfect.
So please, the floor is yours. Thank you.
Okay, thank you very much. Yes, we will start with introducing the concepts, and I would like to start my talk with an example, and then we will cover some concepts with regard to the new technologies, fintech and insurtech, and then. I would like to focus on the main areas of innovation. So in which areas we have observed important innovations in the last 5 to 10 years. Then I would like to talk about InsurTech in Indonesia and some research areas with regard to peer-to-peer platforms, and then we will conclude. So I suppose I have 1 hour, and now we are 7:17. So since we would like to have also some Q&A session, I will do my best to finalize my talk in 45 or 50 minutes. Can you hear the next screen? Can you see the screen?
Yes, we can.
Yes, perfect.
Yes.
Okay, that's good. So now let's start with an example, okay? Before we talk about any theories or any concepts, I would like to give you an example. So this is example that will define our everyday routine. Let's imagine that we wake up, okay, and our watch has recorded how long we have slept. And this watch also monitored our heartbeat and breathing, okay? And then we drive to work. The car sensors track our speed and braking. So far, we have 2 devices. One is our watch, checking, monitoring our sleep, our heartbeat, and our breathing. And then the car sensors, they are monitoring our speed and braking, okay? On the way going to work, we stopped and we bought some breakfast. To pay this breakfast, we pay this electronically. The transaction and the calorie content of our meal are recorded. So look at this. From the moment that we woke up, driving to work, and buying our breakfast on our way, how many information, how much information, and how much data was recorded, okay, from our individual behavior. Let's imagine, God forbid, a car accident happened, okay, unfortunately. We phone our insurance company. The call is answered immediately. The person who answered our call, he or she knows our name very well. She chats with us about our cat, dog, or whatever pet we have. And also, this person at the other end also chats with us about our favorite football team, how it did at the weekend. So all these things are happening, okay? And you are not talking to an individual, you are not talking to a salesperson or any person who is employed by the company, but you are talking to a chatbot. The reason it knows so much about you, because the insurance company is using what? Is using artificial intelligence to scrape information about you from social media. We know very well that there is an increasing use of social media. This is Instagram, Facebook, or any other social media with regard to our social interactions. And this chatbot, the reason why it knows about you is because you have agreed to let it monitor your personal devices in exchange for cheaper insurance premiums. So when you agreed your policy, when you made your agreement, let's assume that you have agreed that the company, the insurance company, can monitor your personal devices. This is starting from your watch to the sensors in your car, and then to your credit cards or your payment method that you already use to buy your breakfast. So all this data recorded, all this data that was created by your actions, by your behavior, then you gave the chance, you gave the agreement, you agreed with the company that they could utilize it so that you can have cheaper insurance premiums. Is this science fiction? it is not. So that brings us to the future trend in this industry. We have seen that more than 3/4 of insurance executives believe that artificial intelligence will revolutionize the insurance industry within a few years. According to McKinsey Futurists, by 2030, artificial intelligence will mean your car and life insurance premiums could change. From the example we have given, we have seen, it was evident that the way we have agreed for our data to be used by the company, from the moment we woke up, from the moment that we started driving to our work, paying our breakfast or paying our lunch, this has provided the company all this information they require about our actions, about our behavior. At the same time, we have given the company the opportunity to have access to our social media so that they can easily monitor our actions and our behavior. All this data in an aggregate form is now being used by the company to help us in a way that we could pay not standard car premium or not standard life insurance premium, that was in the traditional sense, but now have more tailored, have more personally tailored insurance premiums or car insurance premiums that we can pay in the future. So as you see, with just one example, the way that AI, artificial intelligence, will revolutionize the industry will be very evident in the next 10 years. So this is the industry view. This is the future trend coming from industry view. I give this example to you from McKinsey Futurists. I would like also to give you the information that we gathered from the industry in insurance industry in China from our research. This research, we are doing it with the university, Fudan University in China. And this research is funded by British Academy. Me and Professor Xian, we are very much interested in finding out how the entire industry, the insurance industry in China, will witness a sort of time frame to see changes in AI application in various fields of the insurance industry. So what we have done, we use qualitative methods in order to obtain information from the experts in the industry. These experts are coming from InsurTech, insurance industry, financial technologies, media, academia, and various other experts in the field. So what we have done, we have asked these experts, and we tried to find out how much AI applications, like 25%, half of it, or 75% of the applications coming from product marketing, underwriting to reinsurance. And we wanted to find out what is their observation, what is their expectation in terms of changes in insurance industry in China. And what we found out that 50% of AI applications for the entire industry is expected to happen by 2030. So in the previous slide, you have seen the expectations of industry people, industry experts, how they are expecting to see changes in this area. And here, from our research for the case of China, again, this is consistent. We are expecting huge changes, enormous changes with regard to the use of AI in the insurance industry. Okay, this brings us to some concepts. So Before we talk about the key innovations, what had happened in the last 10 to 15 years, let's give some definitions with regard to innovation, new technologies, and fintech. So what is the key driver of change in the financial sector? This could be banking, this could be insurance sector, or any other sector. We have experienced innovation through new technologies. And innovation through new technologies happened in many areas. Recent years, such innovation has happened on the back of new technological developments, with the phenomenon often being described as fintech, financial technologies. Technological innovation, such technological innovation aimed to lower transaction costs and expedite the delivery of services. So we have experienced lower transaction costs and effectiveness and efficiency in the delivery of services. What were the main reasons for that? We have seen how internet connections, how home computing and mobile devices, as well as the development of applications, led to the possibility of lowering the barrier for market entry. So why are these technological advancements? We have observed that there has been now easier for the companies to have the market entry than before. And all this created greater competition and what we call it as a popular term, disruption of the financial industry. Today, my focus will be on disruption in insurance industry. And I will focus on InsurTech. InsurTech is any technology-driven innovation in the insurance industry. And this is the two words combination, insurance and technology. With the same objective that we have just identified, use of technology innovations had an enormous impact on traditional industry models. Again, this aimed to improve the efficiency and orderly functioning. So, in which areas we have seen this technology-driven innovation, from software to applications, startups, and products and services? So when we hear about InsurTech, what we have in mind? We have this, ultra-customized policies. This is very important. In the past, traditional way was to have policies standard for everyone. In InsurTech, this is ultra-customized policies. So my circumstances, my behavior could be different than the behavior of any other colleague among the audience. So each one of us behave differently. Each one of us have expectations. Therefore, we do our risk, we calculate our risk as follows. So InsurTech, when they try to assess this, they are focused on having it customized policies. And these InsurTech areas, we have also seen this in social insurance that government is creating for people to protect people's interests in terms of their medical insurance or any other unemployment-related insurance. And using new streams of data from internet-enabled devices to dynamically price insurance premiums. So from the start of the webinar, we started with this example of having our wristwatch, having the sensors, having our digital payment way of paying, all this recorded data for the sake of us to have full information, to provide full information to the company. So as you see here, streams of data is very important, and using internet-enabled devices the combination of this advancement in technology, they all help to dynamically price insurance premiums. Okay, this brings us to understand InsurTech more. So what is InsurTech in comparison to normal way of doing insurance? How this advancement in technology made a difference in the insurance industry? In the past, the traditional insurance industry, they tend to favor large companies with long experience in the market. Why was that? Because if there is any huge loss coming from any areas like hurricanes, earthquakes, or any enormous loss that could help the companies to assess the risk of any individuals in particular regions, if a company is large enough, then they can mitigate the risk, they can manage this risk. But if a company was very small and they cannot deal with any unprecedented losses, then such companies, such small companies, cannot survive in the insurance industry. So that was the main characteristics of the traditional insurance industry. What happened over time? Over time, we have seen that digitalization has happened, but banking and insurance companies, they were slow in order to adapt this to changes and to seize opportunities by such changing process. So what happened? Digital technologies has impacted the insurance industry, and it brought insurance industry to be open for innovation and disruption or revolution. And we have seen all these manners of devices that were used in order to define more finely delineated groupings of risk, so that it allows more pricing, it allows the pricing to be more competitively. So that was the main improvement in insurance companies. And of course, such opportunities created new companies, new startups joining the industry and adapting to digitalization easier than the incumbents, easier than the companies already operating in the insurance industry. So what were the factors behind the InsurTech revolution? There have been several factors behind the InsurTech revolution. Major social changes, big data, new technology, and availability of capital. In the case of UK, we have seen the importance of major social changes in terms of customers' expectation. They are asking a better and smarter services, and these customers are mainly those customers belonging to the millennial generation. And this millennial generation is the generation now between 29, 34 years old age group. So this age group are demanding for more modular products, and these modular products increases demand, created such factors behind the InsurTech revolution. And of course, there has been advancements in big data, in technological advancements in terms of the use of big data and AI, data analytics, cloud computing, as well as blockchain technology. At the same time, there have been for the industry, there have been huge amounts of capital which was available from venture capitalists, private equity firms, coming from established market makers. If you look at this list of factors here, this will also give us a good idea on how the regulatory aspects of the insurtech revolution should be, because this now provides a challenge for the regulators in order to regulate this industry. This is also the valid case for fintech, because the regulators, the government, should be aware of all these major social changes and expectations, as well as all these changes in technology and new technology, which is coming from AI techniques, and also the capital availability coming from a number of sources. So this is something that is important to discuss for the future, how the regulatory concepts should be not from one angle, but from a number of angles coming from various factors. Okay, this is, I would like to give you a few charts to show you how the insurtech, global insurtech geographical allocations may change from year to year. As you can see from here, insurtech has been the catalyst for change within insurance sector. And if you look at in 2014 data, we have seen the dominance of North America with 80%, and then this is gradually dropping to 45.9% in 2017. Europe starting from 11.8%, but then this percentage is moving to 32.3% in 2017. In Asia Pacific, as you see, the starting point was 5.5%, and now in 2017 we see an increase to 11.5%. So in all areas except the case of North America, we have seen here such recorded information that there is an increase of insurtech deals by region from 2014 to 2017. In the next slide, I would like to give you a more up-to-date information, data coming from insurtech value and volume of deals. And in this chart, we have seen annual insurtech funding trends. This is 2020, and this data is only the data till Q3 of 2020. So still we have Q4 to finalize this 2020. And even though we have experienced a very tough year this year due to COVID uncertainties, there is an increase in this deal count, as well as in the value of insurtech, and the recorded one is around the second largest investment amount and deal count. So this is the deals, and the purple one is the dollars insurtech value for the global insurtech deals. Here we see a more breakdown here from property and casualty, the purple ones, and the green one is from life and health. Again, in this case, if you look at here, that is the 2020 Q3, and such amount is really remarkable amount, and there has been a unprecedented huge volume here with 2.5 billions, and here is 104 deals just happening in the Q3 of 2020. And if you look at the trend from 2014 till 2020, you can easily appreciate how much insurtech funding in volume has been with regard to property and casualty, as well as life and health. And this is the global figures. Here we have another interesting chart to give you an idea about the investment landscape for insurtech. Insurtech players, we see three different players. One is the major global insurance players. So these are the incumbent companies. They are already in the market. They are already working with traditional ways of doing insurance industry. But as we said, InsurTech also attracted new investment, attracted new competitors coming from innovative startups, and these are usually funded by venture capitalists. And then we also have great reinsurers, and they are competing also for access to bigger market segments. If you look at here, in 2014, collaboration between them was only 44%, and usually 56% were disruptive, and this disruption was coming from innovative startups. However, 1 year later, the industry witnesses more collaboration in terms of InsurTech and any other innovative methods. And here we see now it jumped from 44% to 70%, and the disruption is now only 30%. So this also brings us another important research question, is that how much InsurTech innovations is going to be collaborative or disruptive? So this optimal way is bringing new things, good things, and it is important that we focus on this area, and we do research to find out how much such disruptions and collaborations is helping for the enhancement or the betterment of the industry. Okay, so key areas of innovation. There have been four. I have classified them into four, and these key areas of innovation has happened in insurance intermediation, in the shared economies, we call them also gig economies. The third one is in the area of robo-advice, the chat box, and finally in data aggregation and analytics. So let me take you to this quickly. Key areas of innovation in insurance, as you have seen, we have identified all this from insurance intermediation to aggregation and analytics. Insurance intermediation. So here, traditionally, the insurance intermediation was done either by an agent, broker, or bank assurance model. In bank assurance model, banks were also involved in selling insurance products or services. In the new era, this remains the main intermediation channel for most developed insurance markets. But many InsurTech startups are also taking on this model and proposing new distribution models for insurance. And these new modes of insurance are interesting for less developed insurance markets where insurance penetration is low, and the conventional intermediation model that we have just described may not be efficient or effective. What the industry has witnessed is that there have been large investments being made from Asia and Africa into startups and technology based in their region. So let's give an example, a couple of examples from the emerging markets, how these companies operated in emerging markets in order to create intermediation and distribution models effectively. And I would like to talk about Bima, Friendsurance, and Inspire. Bima is a Swedish company, and they operate in 10 countries, 7 in Asia, and Bima is also operating in Indonesia. So what do they do? These companies they create opportunities for those who have not bought any insurance before, and according to the statistics, 75% of Bima customers accessing insurance for the very first time. So BIMA has created such opportunities for the emerging economies. And as I said, they are operating in 10 countries. And we also have here Friendsurance and Inspire. These are mainly peer-to-peer insurance companies. There is also Guevara, but Guevara from UK. Guevara unfortunately failed. Friendsurance is a very successful company. Actually, they were the pioneers of first peer-to-peer insurance model from Germany. And Inspire is a French company. Again, they rely on peer pressure for mitigation. So these companies, they created new distribution models, which created new opportunities for the emerging markets and for those who have not bought or purchased any insurance before. So this has been really very useful for the case of developing countries, less developed markets, with their health insurance products, and by this way, they had the chance to demand for such products, which they were not doing it before. And the second area which we have seen key innovations was in the sharing or gig economy. And this was in Uber or Airbnb. Here, of course, there are some issues how the insurers should address their unique nature of ride sharing. But such sector also has seen a huge, enormous amount of investment in order to cover certain aspects of their business, which we haven't observed before. The other area is robo-advice and AI. I have given you the example at the beginning from the chat box, and we have now increasingly observing the robo-advice, particularly in price comparison and distribution sites like compare.com. But now much effort is being made to develop sites also providing financial guidance. So it is also a trade-off. Would you prefer to receive your financial guide from a robot or from a real person? So AI, artificial intelligence, is providing the potential to simplify and tailor policy offerings to match the needs and financial situation of the policyholder. Of course, this is different from robo-advice, where AI is specifically designed for personal advice, primarily on investment. There is some criticisms that such innovation is receiving with regard to the black box algorithms, because in some cases this could be leading to poor advice. There are various areas that robo-advice capabilities have been used. This is from understanding client needs, proposing policy, implementing the policy, as well as monitoring and adjusting the policy. This brings us to the final innovation, and that was in the data aggregation and analytics. This is from internet advancements, IoTs, and smartphones, the handheld devices and applications. There are also social media, as well as devices such as Fitbit and Apple Watch. These are the devices that collects our individual activity data. So all this data, in the past, traditionally, insurance relied on quantitative data to make risk management decisions. But now, with the help of data aggregation and analytics, this goes beyond this remit. Even though it can be controversial in some occasions, but going beyond this quantitative data, using just quantitative data, but now there is huge reliance on behavior-based credit scores coming from credit bureaus, as well as utilizing other types of data that is coming from the government. For example, open data sites, which is providing us massive amounts of government statistics. This is on health, education, worker safety, and energy data. So all this third-party data, there is a great potential for the insurtech companies to amalgamate them, to incorporate them together, so that they can make use of the longevity data, how many years people live, and the face recognition technology, which is again another great advancement, technological advancement, to recognize people from their faces. And the combination of such technological advancements with regard to face recognition, as well as the availability of third-party data, open data, coming from the governments or any other sources, is now very much helping for underwriting, for the provision of life insurance, because utilizing face recognition technology is trying to predict with the way that is going to be programmed your chronological age, your gender, as well as smoking habits and body mass, BMI. So all this, the combination of data, is now helping to the insurance companies, to the insurtech, in order to create personal-based policies that creates better policy for the individual, and that utilizes more data, more sophisticated data, and coming from various sources, in order to make better decision making. So, insurtechs and the traditional industry. So what is insurtech now doing on the traditional traditional insurance industry? So on one side, we have insurtech companies, and the other side, we have the traditional insurance industry. And we expect that either they will collaborate, or the insurance industry will feel the disruption coming from insurtech. What we have observed is as follows. Insurtech will push the industry to step up the game in terms of customer service and offerings. So if insurtech offerings and customer service are better by utilizing all these different sources of data, and by providing the better offer in terms of price and customer services, then this will definitely create a push. This will definitely create a force on the industry. So these guys, insurtech now is starting to look more attractive to customers because of the way they are delivering tailored products rather than one size fits all. And the use of mobile phones is really bringing more practicality. And we have seen now more insurance companies collaborating with insurtech companies in order to provide more effective customer service and better offerings. So over time, we see that insurtech introduces an evolving culture of innovation in three-stage process: watch and learn, attract talents, and develop new tactical solutions across the value chain, and then experiment, implement, and scale proof the concept. So all these are now, we see how insurtech will impact on the insurance industry. Now, I would like to give just a flavor of what is happening with regard to insurtech in Indonesia. The first chart will be on the internet economy in Indonesia. It's very impressive. Poor country, amazing country with amazing people. Indonesia, it has largest and fastest growing internet economy. You can see from the figures how it started from 2015, 2018, and what is projected for 2025. And how it is also compared to other countries, Malaysia, Philippines, Singapore, Thailand, and Vietnam. You can see here the huge potential here with regard to the population as well as the GDP, recorded GDP for your country. It's an emerging economy, but by World Bank, it has been the status increased to upper middle income economy. And such figures is giving us the opportunities to appreciate how internet economy in Indonesia will develop even further and faster, and how such economy can create more opportunities for fintech and insurtech. Have a look at here. Even though we have all these highly recorded figures for the economy of Indonesia, unfortunately, the country doesn't have high insurance penetration. The insurance has low penetration, meaning that the ratio of these insurance premiums to your GDP is, when we look at 2019, is around 3.04%. And these are the blue ones are the gross premium ratio of gross premium over time. When we compare this with UK, for example, UK has the highest insurance premium in Europe. It is around 14.3%. So if you look at here, the most demanded insurance product is among the insurance products in 2019 has been with 40% of life insurance, and then social insurance, and then non-life insurance and reinsurance. So these are all coming from OJK insurance statistics. So as I said, there is massive opportunity for insurtech in Indonesia. Because of the large domestic population, there is growing middle class and growing internet economy. Even though we have some challenges with regard to low insurance literacy, and also there has been some mistrust of financial institutions. This is also related to what had happened back in 1997-98 Asian financial crisis, and perhaps the 2020 corruption scandal surrounding state-owned insurer PT Jiwasraya. So this is what I have gathered with regard to insurtech opportunities in Indonesia. So research, fintech research or insurtech research. I would like to bring here today, because we don't have much time, and I wanted to give this overview about insurtech at the beginning. We have less time to talk about research, but perhaps in the future meetings, we will have more time to put more details on this. But today I brought you two research papers, which I believe they are very important in the P2P platform related research. And one is published in Journal of Corporate Finance, and the other one was published in Review of Financial Studies. In both papers, they are really trying to find out how the information disclosed by the borrowers to make their investment decisions. And in both papers, profit model was used. So in this paper, this is a paper done by Professor Shaban with the Asian Development Bank colleagues. And what they found, it is on China. They found out from the data used from a platform in Renrendai for the case of all loan listings in this Renrendai in this 5 years period. So amount of information disclosed voluntarily by the borrowers can significantly improve the funding probability. This was the case of normal P2P platform, but we have observed how P2P platforms for insurance has been extremely important. So this creates new opportunities of research for us to think about how we can make use of P2P platforms, which had helped in the case of emerging markets for the for the information disclosure and the effectiveness of insurance for the case of emerging markets. And this is the case for, again, the second paper, which made use of Lending Club's website in order to find out if such lending has been a substitute for bank lending in terms of serving bank borrowers. So in both cases, they are used for P2P platforms. And this now creates us to think for the future research on InsurTech, because it is essential for researchers to enrich the literature related to the impact of InsurTechs on the efficiency of insurance firms, how such impact made an impact on the way insurance firms continue to provide their way of pricing and dealing with their customers. So we have seen what was the aim, and we need to now check if such aim has been fulfilled or not. The other research areas could be on the impact of emergence of the sharing economy, again, on the efficiency of insurance firms. The other area which I find it very interesting is the impact of P2P insurance and regulatory aspects, particularly for the case of Europe, for the case of UK, we have seen how FCA, Financial Conduct Authority, has used various methods, including sandbox, in order to create a sort of monitoring for the new startups, and how they have been provided the chance, less regulatory aspects, in order to prepare them for being competitors in the market. So all these new developments with regard to the regulatory aspects, they require really good focus and do research in this area. Another area could be on the microinsurance products, microinsurance programs, which have been successful in Africa, Asia, and Latin America, but received little academic attention. So I think these are the main topics of great importance that can fill the gap in the literature. And your FinTech Research Center will be very useful in order to look at these areas of research and see how such developments may have an impact for the case of Indonesia. Okay, this brings us to the conclusion, and we are on time. So we have given all these good things, all these positive vibes for the promise of InsurTech, but at the end of the day, we are dealing with a tech risk. So at the same time, we are embracing the technology. We are welcoming FinTech, we are welcoming InsurTech, and we are welcoming all other techniques which is coming with all these technological advancements. So at the end of the day, there is tech risk, technological risk, that we should at the same time understand this risk, and we should ask questions like this. For example, what assurances do we have the blockchain is more secure than any other digital transaction or existing processes? How do we know that the information as a sensor provides is accurate and reliable? And who verifies that artificial intelligence is providing the correct answer? How can businesses protect an autonomous vehicle from being hacked? Where are trade-offs in privacy and the security of personal information being made to enjoy more comprehensive capture of data? So I think at the end of the day, we are embracing this technology, but at the same time, we should be aware of these questions that may come with the tech risk. Thank you very much.
Thank you, Professor Meryem, for the brief explanation and also presentations. Yes, if I can give a little bit discussions, open the discussion for today. In Indonesia itself, we know that even traditional insurance industry is still difficult to compete in the broader market due to, yes, as you has mentioned before, in several issues and also challenges. Then I agree that InsurTech should playing the role as the collaborators for the industry. Also, there are so much more area that we can take for the research, especially in the InsurTech issue. Okay, now I would like to open the Q&A sessions. I already saw one questions come from Bapak Wijaya Tri Wacana Ningrum. Program in economic study. Also, for all of the participants, if you want to ask directly to Professor Meryem, you can use the raise hand feature, and I will ask to the committee to unmute your microphone, or you can write your question in our chat box. Now, I would like to read the questions from Bapak Wijaya. The digitalizations in the finance sector brings convenience like in transactions, but in the other hand, it requires us to understand the workings of this in the new era well. So what is your suggestion, Prof. Meryem, for us so that we can adjust this quickly? Thank you.
Thank you very much. This is really an excellent question. So the disruption that we have identified today on the insurance industry. So there is a disruption coming with all these technological advancements on the industries, on the banking industry, on the insurance industry. But think about, I totally agree that there is a disruption on us as well as academics, because in the new era, the expectation is that we should make use of those techniques in our research. So currently, we are not at that level yet, but in 10 years' time, we could be expected in the future that we should start utilizing artificial intelligence techniques in our research. So are we ready for this era? At the moment, we are not. What we have done in our PhDs, or what we have done in our masters, at the moment, from a graduate point of view, say you are a graduate from Faculty of Business and Economics, how many courses in your curriculum, in your modules, you have modules teaching you Python or R or any other software related things that we would require for the future. There is maybe at the computer science level or maths level, but still at the faculty level, our faculties level, like Faculty of Business and Economics or business schools, we need to think about the future and we need to get ready for this. This is with more education. And as we said, literacy is important. It's not that just in the industry or for the employees' point of view, but we as academics, in order to produce research that could be published in really good journals, we are expected to upskill our knowledge and understand how this process works, and what we can make use of this with these techniques that can bring our level up enough to create more research and produce more high quality research. Thank you.
Yes, thank you, Prof. Meryem. Now, we also have another questions come from Syaiful from Universitas 11 Maret. The development in financial technology also raises concerns on consumers' data protection. Has consumers' data protection received wide interest in InsurTech research? If no, what are the gaps in this field of the research? Thank you.
Thank you. This is another very good question. This is a very important area, and it brings us the ethics, the matter of ethics, how we could make use of this consumer data protection, and at the same time we are aligned with the rules and regulations that is coming us with ethics. So what we have seen from regulatory perspective, that there is focus in these areas, and there is a huge interest from the regulatory aspects in order to protect the consumer's data as well as many other information. And you can easily see from the regulation coming from the GDPR and many other regulatory aspects in Europe and in other countries. Unfortunately, there is not much done yet with respect to this area. And it is important to see how the regulatory aspects which had happened, and how this might have had impact on such data protection related activities. So it is an important research area. Definitely, it's an important research area, and we will see all this increasingly, because, as I said, even though we are embracing all these technological changes, but at the same time we need to be careful, and we need to look at our privacy, the data issues, how the data would be utilized, and we need to see the impact of this on the issues. So I believe it's an important area, and I think the more we understand and we appreciate the risk coming from the use of data coming from various sources, will bring more research in this field.
Yes, thank you so much. So everyone, we still have plenty of time. If you need, if you want to ask to the Prof. Meryem directly, you can use your raise hand feature in the Zoom, and we will ask the committee to unmute your microphone so you can ask directly to Prof. Meryem, or you can write your questions in our chat box. Okay, okay, we still have another questions come from Bapak Indra from Universitas 11 Maret. Do you think the lack of financial regulations become an important aspect to describe the investment flow and market entry motives as well from developed market to a developing country? If that is the case, how about its business sustainability and financial stability issue? Thank you.
Thank you. Okay, if we give an example from China, we have seen how much the lack of financial regulation has been important in boosting the investment in peer-to-peer platforms. Okay, this is a very, very important example that we can give from the case of China, because in this particular area, there has been lack of regulation, which boosted the investment flows, and of course the market entry motives. But lack of regulation brought other problems. Again, 2 years ago, the industry in China has also suffered. We have also observed a number of companies failing because of the lack of regulation. So failing such platforms, such peer-to-peer platforms, had caused enormous problems for the investors. So I bring you another question to you. How much financial regulation should be there so that it doesn't cause problem for the innovation? So we have a trade-off between financial regulation and innovation. If we have enormous amount of regulation, that can have huge impact on the amount of innovation. If we don't have financial regulation, then we can end up having problems with the failures in the platforms or in the companies. So this trade-off is something that the regulators should be very careful. In the case of UK, how this is managed? UK regulatory agent, which is FCA, Financial Conduct Authority, what they do, they try to have different regulatory aspects for the startups, for the companies that would require more lenient regulatory issues. And then after they learn the way these companies work, then they can be provided more stringent regulations. So this is something that it should be arranged with the regulators. So the way that we look at it, regulation is something that should be optimized so that it creates the necessary investment flow and market entry motives, so that this is something from developed market to developing countries. When we look at it, the amount of regulation. So if a country has huge regulatory constraints, then such issues will not create a motive for the companies to move from developed market to a developing country. So again, regulatory agents in a country is important to assess the implications of this, and at each stage, they can provide various motives for the new entries or for the startups, so that this can create a flow of entry to the countries. It could be insurtech market or fintech market. And I believe if there is determination from the countries' regulatory bodies, this such way of dealing with the regulation, not lack of regulation, but not too much regulation at the same time, it can create more sustainability and more financial stability.
Okay, thank you so much for the great explanations to us. So, anyone else to ask to the Prof. Meryem? Maybe you want to ask directly to Prof. Meryem? You can use your raise hand features, everyone. And I will ask to the committee to unmute your microphone.
Is everyone tired?
We still have plenty of time. Maybe we still have about 5 till 10 minutes more. Anyone? Oh, okay. Yes, we have.
There is one more.
Yes, one more questions from Ibu Erna from Universitas Mercu Buana. Please give us your perspective on digital literations. Will become a big issue for the small, medium enterprise and less fortunate community.
Yes, thank you for this question, Erna. This is an important area. Currently, we are working on this research with Bank of England. We got a grant from UK Research and Innovation to work on the risk exposure of SMEs, small medium enterprises in the UK. In this COVID era. So how their risk exposure has been, and what sort of problems and challenges these SMEs have had before or during COVID times for credit exposures, and how their credit issues affected their access to finance. So I believe such issue is even from financial inclusiveness point of view, I believe such issue is even more important and more relevant for an emerging economy like Indonesia. And I see that digital literacy is very important because this will create more inclusiveness. If they have digital literacy, if they can assess their credit exposures, if they can assess their risk, and in the future, this will provide them more opportunities with regard to funding opportunities, and with other types of opportunities that can come via different stimulus packages from the government. So my perspective is that digital literacy at every level will be important, even at our level. We have survived so far by using certain softwares, by utilizing certain techniques in terms of our research success or teaching or learning. But in the future, we don't know how much we will be able to survive with the current knowledge we have. So we need to upskill ourselves at the individual level as well as at the companies level and at the country level. So digital literacy is definitely a very important must for all levels.
Yes. Okay. Thank you so much. Maybe if you want to still have any questions from Prof. Meryem, I will open one more chance for all of the participants. Yes, please. Because it's a great opportunity for us now to meet with Dr. Meryem during her busy time. No, anyone? Okay. If not, Prof. Meryem, I really want to send our gratitude towards you because you want to join with us today. So thank you so much. And
thank
also,
you.
we hope that one day, as soon as possible, we can meet you in person. We will greet you in Solo. So we will welcome you to Solo. Please come to Solo, Indonesia.
I'll be very happy. I'll be very happy to join you. I visited your country several times. I came to Jakarta,
yes.
Lombok, and also to Bali with the invitation of BPK. So I work very closely with colleagues in BPK, and me and my family, we are very much in love with Indonesia and also Indonesian people.
Okay.
So, thank you very much for this invitation, and I'm so pleased to give this talk to the colleagues in Indonesia, and I do hope that I also host you here in the UK.
Okay, thank you so much.
Thank you. Terima kasih.
Oh iya, sama-sama. Sama-sama, Prof. Meryem. Okay, now everyone, I hope you can on your camera on, and I will ask to the committee to take our virtual photos. So before we end the sessions, please, we will have the several pictures that we can share together.
Excellent.
Okay. And also, I would like to remind you that we will put the absence in the link for absence in our chat box, so you can please fill the attendance list. It will help us to send the e-certificate to all of you. Okay, now, the committee, are you ready? Okay, we will take the picture. Okay, I will count 1, 2, 3. 1, 2, and 3. Smile. Okay, once again. 1, 2, and 3. Smile. Thank you, everyone. Thank you so much for joining with us. So I hope all of you are always stay healthy, stay safe everywhere, wherever you are. Don't forget to always put your mask on whenever you are come out of your home. And so always stay healthy, and bye-bye. See you in the next
Thank you.
event. Thank you.
Bye.
Terima kasih. Terima kasih semuanya.
Bye.
Terima kasih.
Bye.
guys, my name is Ferdy, and in this video I will talk